In this video, we are going to be analysing Carnival Cruise Line's ticker CCL because it did push down over 13% on the day. Again, a fundamental reason, so you may want to wait for it to kind of relax if you're looking to trade off more technical levels, because again, fundamentals are always going to be the key driver. If you're trying to trade technicals into a fundamental drive, unless they're playing in the same direction, it could be a recipe for disaster. But anyway, down 13%, what are key levels we are paying attention to? So to pull down the standard deviation chart, this is going to be where we do our main technical analysis. What we can see in it is actually quite interesting. Again, this isn't a rare scenario what we've seen, but where was our first deviation on the 1 year chart? 1169. Where did we get to yesterday? Around 1150. Very close to that first deviation, and then all of a sudden you see fundamental news comes out and it drops. Again, you go back, go back and check analysis videos from here, or check it yourself. It doesn't tend to be a rare case. You have people thinking, okay, you're trading off technicals, you're trading off standard deviations. Again, it's not the fundamental, it's just you get lucky. You call it luck, you call it a probability, but a lot of the times when these big fundamental news releases happen, they happen when you are coming into overbought or oversold levels. Again, it could be luck, it could just be maybe companies are waiting for their stock price to hit certain levels before they're doing it. Who knows why it really happens, but if it works, why not pay attention to it? So that's one of the things I wanted to point out with standard deviations. Again, this isn't a rare thing. You can go and check many analysis videos. It always, or not always, but probably 70% of the time, they tend to happen when it's coming into a key level as it is. So that definitely can provide some added trading opportunities, because in the case when you do maybe short coming into these first deviations, the big news release comes out like today, it moves 13%. Obviously, if you're not trading or if you're not shorting shares, that's fine. You might be in with options, and the options is where you can make tons of money. I mean, if we quickly go and check out this option chain, how are they moving today? So again, if we're buying puts, which you would have, because we would have been more bearish on it, some of them are up 300%, 200%, going even out to, say, longer out expiry. Some of them are still up 80%. Again, sometimes it can be better trading through options. Again, you never know that this release is going to happen. That's the only thing. But again, if you're trading the strategy, you're trading coming into these levels, occasionally you're going to get lucky, and you're going to be trading it as these big news releases come out. And again, it can just play in your favor and will make a lot more money. Now though, anyway, to carry on, what are going to be the key technical levels kind of going on from this? So again, that was our key technical level. We have kind of broken down from that. And now what the key level is around 1020. This is our first deviation on the 4 hour. Now what have we seen happen? So obviously we have gapped, or we did gap below this level. We haven't yet come back to retest this. So this is really what I'd be paying attention to. Yes, it moves on a fundamental reason, but once it calms down, which it kind of seems like it's doing a bit more today, you expect it to become a bit more reasonable, come to this level, even if it's going to continue down. So really that would be the main thing I'd be waiting for. Come and retest this 1018. Once it tests this level again, then we may stay a bit more bearish on it, but we would expect a retest of this level at the minimum. And if we break this, where are our targets going lower? So if we continue down from here, we have targets very far off, and actually that's one of the big problems is we have targets around 650 and 610, and then obviously that gap fill location at 725. So quite far off from where we are now, and that's the only problem with this trade is, I mean, you have a big area to go. So I mean, it could be a trade if you're taking in a bit of size, just scale down on the way down if you were looking to play it short, just because the target is so far away. And how can you find these targets? Again, just scaling out at key psychological levels can always be a good idea. So $8, $9, and so on, or just kind of key levels. And again, they're not going to be the most strong levels, but I mean, you can see we sold off, that's where big pressure came in. Sell off, big pressure come in. So the 850, 825 can be used as levels. But again, I mean, I imagine you have your own way of finding levels. If so, if you are trading this short, it could be a good idea. If you're looking to wait for that retest and then trade it short, just again, you probably don't want to hold it all to that 725, because we may not hit that. Yes, that would be our target at least, but sometimes, you know, news comes out and it starts moving, and you don't want to be turning a big winning trade into a losing one. So obviously be paying attention to that, actively manage that position if you're trading that short. But now onto the even further out levels, we'll go over both key support and resistances more for the longer term. What are we paying attention to? So to the downside, we have levels at $2 and $1.40. Now this one's quite interesting because very far from where we are now, but these are our first deviations, so we expect to still trade within this range. Now, unless markets get very weak and we see more news, coming out with CCL's debts, that's really the only way I can see us getting down to that low. Because again, when it comes down to that kind of value, it is going to be, I just think, very difficult. Again, unless they're on the urge of bankruptcy or there's rumours of bankruptcy or that they're going to start defaulting on loans, really, I can't see us falling that far. But if for any reason, again, it's better to be prepared than underprepared. So that would be kind of our final target to the downside. Again, the key ones are really going to be that 725 to around 610, statistical means and gap fill locations. But really, this one will be an easier one to trade, I think, to the upside. So again, getting that retest of 1015, trading that short or looking at it more short bias. But if we can break that, then wait for that break above 1170. Again, we want to break, come back to retest it as a support, and if it can hold, then that will give us a good likelihood that we'll push up to at least $14.15, going on to 16.75, 18.25, and then final levels taking us out to $22, 22.50, and a final level at $27. So yes, there is a lot of levels provided in this video. Do you need to pay attention to all of them? No, we make these videos just so you're prepared for whatever way it goes. But all your main focus is ever going to be is where we are now at 970. Your key focus is 10.15 to 7.25. If we continue to fade again, that's going to be our key target. If we start to push up, again, what's going to happen at this level? Is it going to be a retest before fading back down? If so, again, that's a trade opportunity. Otherwise, if you're looking more for the bullish move, wait for that breakover, come back to test it as a support, and then you could be looking more long bias on it. Anyway, that is the breakdown on CCL. Let me know if you're trading it yourself. Otherwise, I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.